view this video to review the Affordable Care Act functionality offered by Payality. This video is meant to train clients on the use of both our M3 installed version and Payentry, our cloud-based payroll and HR solution. As you know, the Affordable Care Act and its reporting requirements for large employers has arrived. Beginning in January, employers with 50 or more full-time equivalent employees, or those employers with self-insured health plans, will need to provide Form 1095-C and 1090 to their employees and 1094-C to the IRS, which is a reconciliation of the 1095-C forms that are provided to the employees. These 1095-C forms are due to the employees by the end of January. Actually, it'll be February 1st for 2016 because January 31st falls on a holiday. These forms will need to be filed timely and accurately to avoid the penalties associated with failure to file. So we're assisting our clients in providing 3 ways to comply with the law. So within the system, clients will be able to populate and maintain the Employee Affordable Care Act data that is meant to populate the forms. The first method will be manually. Some clients will want to maintain each individual employee's records and add the values 1 employee at a time. The second is a bulk update. The clients can look at all employees or a group of employees and be able to update the coverage values and the information needed to populate the 1095-C forms for multiple employees at a time. And then the third is the automatic code selection. We've always had insurance plans functionality within the system for employers to be able to track the different insurance plans that they offer. It could be health, dental, vision, and so forth. But now it has added the functionality to put information related to the lowest cost value, minimum value plan, and to meet the ACA requirements, and we'll review that. And then a company ACA tab to set the remaining values that need to appear on the 1095-C and 1094-C forms, and we'll review that in more detail. Regardless of the method chosen, Payality will create an Excel file for all clients on January 5th. So it'll give a global view of the data that resides within the system currently, to give the client a chance to review that and then make any updates and then return that spreadsheet to Payality to be uploaded into the system. In this presentation, there's some helpful links as well, and to the links for frequently asked questions related to the employer shared responsibility. But let's go ahead and get started looking at the form. This is the 1095-C form, and really there's 4 important elements of this form. Part 2, box 1 is the offers of coverage code. How was minimum essential coverage that meets the minimum value and affordability requirements of the Affordable Care Act provided to the employees, and their specific codes, and we'll look at each of those. Box 15, what is the employee share of the lowest cost health plan that meets the requirements of the Affordable Care Act? What was offered, not taken or accepted by the employee, what was offered to them? And then box 16, safe harbor, if it's applicable. So, and this is particularly important for employees that opt out of coverage when they were eligible, and to record information related to why they may not have participated in the plan. And then part 3, did you provide self-insured coverage? And if you did, the additional data that needs to be reported on this form related to dependents and their coverage and so forth. So let's review each one of these boxes so you have a better idea of the information that's needed on these forms. So first, these are a snapshot of an entire year. So even though an employee may start in May, this form, they're wanting information for each one of the months related to coverage and so forth. And let's look at each one of these offers of coverage codes. First is minimum essential coverage, and that provides minimum value. So is it a qualified health plan that offers minimum value, generally bronze level plans? You should have a broker that knows the Affordable Care Act and to make sure that they are offering you a coverage that meets these minimum essential coverage and minimum value requirements. And then, is it affordable? Did this plan require the employee to contribute to cover just themselves less than 9.5% of the federal poverty line? It's for 2015, it's $1,118. So if what the employee would contribute out of their paycheck, if they were covered the entire year, was less than that amount, and it meets all of the requirements of coverage, and it's offered to their spouse and their dependents, then you would mark 1A. If it doesn't, if it's not less than $118,000, then it would be one of either 1B through 1E. So you offered coverage, minimum value, but it was not offered to the spouse or dependents. 1C is it's offered to the employee, the dependents, but not the spouse. 1D, it's offered to the employee and their spouse, but not dependents. Or 1E, probably the most common, is it's offered to the employee, their dependents, and their spouse. Or 1F is that it meets the requirements, but it's not a minimum value plan. It's minimum essential coverage, but it's not minimum value. And again, a qualified broker that understands is going to be able to let you know if it meets those requirements, and is it offered to employee or their spouse or that combination. Or the employee was not a full-time employee for the month, but they're enrolled in self-insured coverage. That's 1G. It may be a little less common. That only obviously is applicable if you have a self-insured plan. Or the employee's not offered coverage. And that if they're a full-time, they're not offered coverage, and you do not have the transition relief, you're going to pay a penalty for not offering coverage. So the IRS wants to know that. And then the employer is claiming transition relief for that employee and their dependents. So you may be one of those employers below 99 and can claim transition relief. And we'll be assisting you with that so you understand the numbers from the payroll data we already have in the system. Box 15, if you've chosen box 1B, or code 1B, 1C, 1D, or 1E within box 14, then you need to report the employee share of the lowest cost monthly premium for self-only coverage that was offered to the employee. So what does that mean? You may have a Blue Cross plan that costs the employee $120 a month, or a Kaiser plan that costs them $80. Well, you would need to record $80 because that's the lowest cost plan for Kaiser. Even though they may not have chosen coverage or chosen something else, you need to report the $80. Like I mentioned, that amount paid may be different than what the employee is currently enrolled in or was enrolled in. It's what was offered. What if they chose the lowest cost plan that was offered to them, what would their monthly cost be? And that's what needs to go in this box. And so if the employee was offered coverage but they're not required to contribute any amount towards the premium, then you can report 0 in this field. Now let's talk about the safe harbor. What the IRS is trying to do is look to see if the employee 1 has enrolled in coverage, and that would be box 2C. So this will probably be the most common for clients. If the employee was offered coverage, they accepted and enrolled, then box 2C would go in this box. But if the employee did not enroll in coverage, but they were offered, if they were a full-time employee for any month out of the year and they were offered coverage and did not enroll or are not enrolled in coverage, you need to track one of these codes. And this is going to either help you avoid the penalty for not offering them coverage, or if the employee opted out and then went out on the exchange and got subsidies to buy coverage, and one of these codes appear, or some of these codes related to affordability, then they're going to have to pay back all of the subsidies on their tax return that they received. So the IRS is looking at both and putting the burden on the employer and our clients, and this is what this is for. So 2A is they were not employed during any day of the month. And so even if they weren't hired yet, let's say they came on in September, and so obviously they weren't covered, 2A would go in through January through August. Employee, not a full-time employee, so they were not a full-time employee for the month. And so if you have these people, variable hour, they're fluctuating up and down, then you'll, or they terminate mid-month and don't have coverage for that month, then you'd use box 2B. 2D is a non-assessment period, so you may have a waiting period before coverage starts. And so let's say they were hired in May and coverage begins on the first of the month after 60 days, so July 1st. So for May and for June, you would use box 2D for that information. Or if you're 2E is for a multi-employer, so if they're part of a collective bargaining unit or on a multi-employer plan, that code would go here, and they have and are receiving coverage through there. 2F is so that's if they do not have there's a reason why they don't have coverage those first few, but if they opt out of coverage altogether, you still need to prove that what was offered to them met the affordability requirements. And you have a few ways to do that. The first one, are you using the W-2 safe harbor rule? And again, I would look at the frequently asked questions in the link provided on the first page to understand what these safe harbor rules. But basically, the W-2, if you said based on their W-2 wages, what they're contributing is not 9.5% of what is on line 1 of the W-2. So are you using that method to determine that what you're offering is affordable? Or 2G is, are you using the federal poverty line safe harbor? That was explained on the first page. So if what they contribute is less than if they had opted in or chosen or enrolled in coverage, would they have paid less than the federal poverty level, $1,118? Or Section 2H is the rate of pay safe harbor. So if they're making $10 an hour, are they paying more than 95 cents, which is 9.5%, towards the cost of insurance to coverages themselves? Or you may have a non-calendar year transition relief where you have a plan that is not calendar year. Have a link here. It's a fairly complex rule, and you'll want direction from your broker to see if you qualify for that non-calendar year transition relief. So, and then the final part is, are you offering a self-insured health plan? If you are, you have 15 employees or 20 employees, you have to file the 1095-Cs. And again, if you have over 50 full-time equivalent employees, even though you're not required to provide coverage until you have 100 for 2015, you still have to do the form. But as I mentioned, if you have self-insured, you're, in addition to the employee data, you're going to need to track the name of the covered dependents, their social security numbers or dates of birth, and the months that they were offered coverage. So let's go into the M3 system and understand, and then I'll actually go into the system and show you where this data is at. So in the ACA tab of the employee screens is an additional area to populate the coverage data, to fill in the data that's needed for the 1095-C. So here's the data related to the length of coverage. And again, if an employee, you have to cover an entire year, and we'll show you the view data tool that will help you know that all of the data is completed correctly. But in box 14, you're going to want, for this data, what was the offerage of coverage code related to that employee that I explained earlier. what would be the employee's cost for the lowest cost plan that meets the minimum essential coverage and minimum value requirements of the Affordable Care Act. What's the employer relief code? Well, are they enrolled in coverage or one of those other codes for box 16? And then is the employee self-insured? As mentioned, there will be, if you choose the self-insured, a dependent tab will show up, and the data that's stored in the dependent tab within the employee record will show, and you need to show those dependents what months they were covered and then the other required data. In addition to this coverage, there's now a View Data tab within the employee record, and it's going to show you exactly what is going to appear in each one of the boxes. There's box 14, 15, 16, and was it a self-insured plan? But then it's going to look and validate to see if there's any missing data, and if there is, it will record that in red. And then, so you will need to go back and put the appropriate information for the employee in that box. So let's look at Millennium and give you an idea of the employee record. So here's the new, the ACA tab. It's been there for quite a while. Before, it just had a status tab where you were recording whether the employee was a full-time employee for ACA status, and that's over 30 hours a week or 130 hours a month. Were they a part-time employee, or were they very unknown because they're variable hour? They're going up and down between that 30-hour week. They may or may not work, or they're a seasonal employee and so forth. So we previously provided 6 training sessions for clients to begin to use and populate this information. But now there's the coverage tab, and so this coverage tab is what was shown earlier in the presentation. So it'll show the months of coverage. If you can put 2100 here so that that means this will be an ongoing thing. It'll go year to year, or you can manage this each year. But if you think this is going to be pretty much the same going forward year to year, then you can set that date into the future. That kind of means infinity within our system. And then you have the various offer of coverage codes. So you can go into each employee if you like and do this. Now, what some clients may do is, and I'll show you in the bulk update, is they will apply values globally to all employees or a group of employees. And then even if you do that, you still have the ability to come in one employee at a time and make those updates. So let's go ahead and look at the bulk update. Oops, go back. So in the bulk update, on the company tab, there was the ability to go in and previously to go in and update the statuses on the employees. There was also a status audit that would look at their actual hours worked to determine what their status should have been over a period of time. That's critical that be used as well. And again, we provided training on that. But in this case, where you have groups of employees that have the same coverage values, you can do the offer of coverage code, the box 14, 15, and 16 data, and you have the ability to sort through and filter out for specific groups of employees. And so you can update as many employees or all of your employees at once using this tool. And this is what it looks like. So you can set the start and end dates of the values you want to set, the box 14 data, box 15. The system even has a tool that says, okay, this is what I want to set, but if there's an employee that already has these values set, ignore those employees. And so you can check those. And one of the really nice tools here of the bulk update is that it's going to look at hire dates and term dates and so forth to populate those months where they were not employed. So if you recall in the employee record in the view data where it had those red boxes, you know, there are those boxes that were highlighted in red because the data was missing. This bulk update feature will manage that automatically for you. So let's go ahead and take a look at how that looks. So right here within the company, there's the ACA tab. And we'll go over that, but here's the employee bulk update. And so what's happened, you can previously did the status, now you can do coverage. And the beauty of this is that you can filter things for specific date. You know, you can set effective dates. So if we want to do this for this year, let's say, And then which employees do I want to see? I want to see their employee stat, no filter. I want to see all employees. And so there's the entire list of employees. I can select all of them, or I can Control-Alt, list all the employees and choose the ones that I want, select all, and then click Update Selected. And again, set the values that I want to globally apply to all of these employees. And you say do not change existing employees. You go in, do that, apply that, and then you will see globally what's been applied to all the employees. So their offer of coverage code for the period of time, the employee share, this box 14, 15, box 16, and were they self-insured. So there's all of the data needed to bulk update those employees. Let's turn to the presentation here. Now the third is the automatic based on when the insurance tab setup. So within the system previously, you could set up the plans that were offered by your company and then set information related to the premium cost and how much the employer contribution. Now there's been additional data added to so that it will look and see if it's a minimum essential coverage, meets the minimum value requirements, who is provided coverage under the plan, so that the system will know based on this data how to populate the data within the employee records automatically. And so it looks at start of coverage dates and the health insurance, who it's offered to and so forth, or is it a self-insured plan. And then you can set up the premiums that the employee would pay. Now, if you do not currently have the insurance tab, I would highly encourage you to go ahead and put at a minimum the lowest cost plan that meets the Affordable Care Act requirements in the system, and then set up what the total cost of that plan is to at least to the employee, if nothing else. And if it's age banded and that's applicable, then you can put the age bands, put in the total cost, and then within the record set up how much is the employer contributing to that cost. So in this case, if you had a 42-year-old employee, the total cost of the plan is $250, but the employer is paying 50%. The employee's out-of-pocket cost is $125 a month, and that is the amount that would appear in box 15 automatically on the 1095-C based on this setup. Then in addition, we've added an eligibility tab so that you can set when employees that are full-time become eligible for health insurance. So that's critical in setting up those codes in box 16. When were they eligible? Was there a waiting period? Yes, they became eligible, and we offered all of them coverage, and we used this safe harbor method to decide how they should be to determine that it was indeed affordable to them. So you would set that up in the system. And then finally, in the company ACA tab setup is to populate the information related to box 14, is it a qualifying offer method? Or do you have transition relief because you're less than 99 employees? And the other important thing is this company code part of an aggregated group? For example, if our clients have multiple companies running under the codes within the system, but they're all under the same federal tax ID, then we would create an aggregate group, because all of those have to be considered in a whole for the full-time equivalency counts and so forth. And on the same, similarly, if they're separate federal IDs, but it's controlled by a limited group, it's all the same owner, but it's separated into different tax IDs, then those would be an aggregate group. And again, all of those count for full-time equivalency. So let's go into the system and show you where this information would be. So the insurance tab is here. There's the Blue Cross plan. It's a health plan. set up all the coverage values and so forth, when the coverage started. I can change that if I want or keep it that way. And then what's the employer contribution? Are you paying 50% of, and again, you may want to set up at least the employee coverage only. So are you covering 50% or up to a certain amount? The premium values. And again, if you want to just do employee for the Affordable Care Act purposes, just looking at what the cost is to the employee. So this is really the only relevant field as it relates to the Affordable Care Act. And then eligibility. When does the employee become eligible, or what group of employees? You may have different employee groups, so you can set up those groups and say this group of employees is eligible immediately in 60 days after hire, on the first of the month, after 2 months from their hire date, or so forth. Whatever those eligibility are, you'll set that up within the system. And then on the ACA tab is, starting on this date, we're using the qualifying offer method. No, we have transition relief because we're less than 99 employees, or this 98% offer method. And you, again, look at the frequently asked questions for that information. And so these are set up, and when this data is populated, as you hire employees, it is going to look at hire dates, term dates, and so forth, all of this data here, and automatically populate the data within the employee record. So what you see here is all going to be driven. Make the change here. So all of this coverage data here is going to be set based on the values within the insurance plan, eligibility, cost, the employer, is it transition relief and so forth. So this data will be populated. Again, though, you have the ability to go in and override these on an individual employee basis. So that is Payality's Affordable Care Act functionality. Again, these forms are due to the employees by February 1st of 2016. So we highly encourage you to begin populating this data. And of course, your payroll specialist will be available to assist as needed. Thank you for your time, and hope this training was helpful.